My name is Morten Skipper. 4 years ago, my family and I took the decision to move from Denmark to Luxembourg.
My name is Vittoria. I lived in Italy before moving to Luxembourg 6 years ago.
I'm Cara Brown. I moved from New York to Luxembourg 2 years ago.
The thing that stands out to me in Luxembourg compared to other places is the ability for me to combine my career with a really good family life. So for us, it was very important that the kids would be exposed to other cultures and also have the English language as a first language. That is why we chose the international school system. But there is of course also the European school and the public Luxembourgish school system that offers a curriculum in English too.
After checking my emails in the morning, I take public transport to go to the office, which is very convenient and it's for free. I think that Luxembourg offers a high degree of diverse opportunities, particularly in the financial sector, because it's one of the main centers worldwide.
I love that it's so unbelievably international. You always meet people from other cultures, other nationalities. It's of benefit also in the work environment to have people from different nationalities.
I am the head of investor services and I manage teams in Mumbai and New York. Here in Luxembourg, people seem to make time to talk to each other. It's not the uptight, all business all the time type of attitude. There's a lot of knowledge sharing here that goes on, so that's been a huge help for my career.
The last 2 years, I've been working in private equity. I think that the environment for private equity is really exceptional. It is growing into a major PE hub, and it is growing in an incredible pace.
I have a dog and a horse, so I love to spend time with both of them. Mostly in my free time, I try to go for walks in the woods. It's my personal peace palace, I call it.
If I'm not working, whenever possible, Declan will ask to go over to the pirate ship park where he can run around. They've got the sand, the water play in the summer usually, so you'll see all the kids splashing around playing with all the various water, and the parents can chit chat and keep an eye on all the kids running around, so it's a really good spot. You kind of learn to just chill a bit, and you just take it in and enjoy your family life, your new friends, colleagues. It's been a really great experience so far.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Good morning, ladies and gentlemen, and thank you for joining us today. Ever since the halcyon days of 2009 and Satoshi Nakamoto's first Bitcoin transaction, blockchain, the underlying technology that powers that transaction, has captured the public imagination in a way no ledger system has ever done so before. Blockchain and distributed ledger technology systems more generally have since then moved from being solely the purview of cryptocurrency enthusiasts to being put forward as potential solutions to many of the current issues that face us in the world today, both in the financial sector and more generally. Tokenization, which is the topic of today's event, is one such use case. Tokenization refers to the process of linking a real-world asset, be that art, or real estate, or financial securities, or many other things, to a digitized representation of that asset within a distributed ledger system. Tokenization has the potential to fundamentally reshape our approach to investing, bringing new tradability and liquidity to previously untapped asset classes, and also bringing greater transparency in the process. It's for that reason that many financial services institutions are already beginning to disrupt themselves by building out tokenization infrastructure themselves, or are partnering with fintechs operating in the tokenization space in order to do so. Today we have an expert panel to guide us through this topic, looking at the topic from various different angles, both from a regulatory perspective, a practitioner perspective, and a legal perspective. I'm looking forward to today's event, so let's, with that, get started. So, I'm delighted to welcome our first expert today, Natasha Delauge, who is head of the Innovation Hub at the Luxembourg financial regulator, the CSSF. Natasha has been with the CSSF since 2002, where she's built out a solid background of an expertise in payment services, consumer protection, financial technology, and innovation in the broad sense of the term. Natasha, thank you for joining us today.
Well, thank you, Chris, for having me today and to discuss this interesting topic.
Cool. Before I get started with my questions for you, Natasha, I have a question for you, the audience, a poll question which should be available under your stream now. If you don't see it, please refresh the page and it should be visible to you. And the poll question is, the biggest advantages of tokenization are in A, bringing extra efficiencies to established financial markets, B, bringing liquidity to new asset classes, C, they're in the cryptocurrency space, or D, they're in other areas not listed above. So while you at home are thinking about that, I'll get started with my questions to Natasha. So Natasha, is there a special category of license for a firm that conducts tokenization activity, or is it defined in some other way?
No, Chris, unfortunately not. We do not have a dedicated kind of license for tokenization activities. You must understand that tokenization is a generic term that comprises a lot of different activities, and some of which may fall under a financial sector regulation. So when you're confronted with a business model dealing with tokenization, the first thing you do is you look at the characteristics of the token, because not only can the issuance of those tokens be submitted to some kind of regulation, let's say a part of the tokenizations, the issuance could fall under the regulatory, can have a regulatory aspect, or it is the services around, the activities around those crypto assets that are regulated by the financial sector. Now, you have this very diversified set of regulation that could potentially apply to a tokenization activity, and in order to be sure and to determine whether that activity falls under the regulatory remit, the projects need to be assessed on a case-by-case basis. And when doing that, we are following the approach substance over form. So you can not only say, well, the purpose of this token is a payment, or the purpose is investment. No, you have to proceed to an in-depth legal analysis of the token and see whether those characteristics match not only the legal definitions, but also that the activities fulfill the legal conditions. And when doing that, we take the existing regulation and apply it in a tech-neutral way. you must understand that this is a balance act for the regulator. Not only do we have this set of regulation that we apply to activities that were not in the scope of that regulation when it was created, but we have an innovative, friendly approach. We see, does it match or does it not match? So we have a very open approach, but we also make sure that we still respect the word of the law.
Mm-hmm. And have you issued any particular guidance, perhaps on the topic of tokenization to help firms like some other EU jurisdictions perhaps have?
Yeah. The question of the guidance is a question that I am asked pretty often. But the CSSF has decided not to issue any overarching guidance for the simple fact that, let's say some 2-3 years ago, when there was this hype around ICOs, the CSSF didn't see much projects. We only had like a couple of them. And so it was difficult to draw some common characteristics. On the other side, we had this existing regulation that was fulfilling its purpose very well, and that is why we have not issued any guidance to this day.
Okay. And then on a local level, is there a reason potentially why there's not, say, a Luxembourg license for a tokenization firm to operate within Luxembourg, say?
When you look at the tokenization phenomenon throughout Europe, you see that there are different member states that have taken the initiative to issue a national regulation. Luxembourg was always of the opinion that we should not contribute to that fragmentation, that we had this existing regulation which came with a huge advantage given the fact that, given its European origin, there was the passporting regime attached to it. That means once you are licensed in Luxembourg, you can provide your services throughout the European Union. And this is something, the prospects we see want to have. So the fact not being limited to the national market.
Yeah, so it's really about passporting, and you need an EU framework, therefore, to in order to be able to provide services not solely in Luxembourg, but obviously throughout the rest of the European Union as well. Before we move on to our next question, perhaps we could see the results of the poll. Okay, so quite an even split here that we have between A, bringing liquidity to new asset classes, and B, also then bringing extra efficiency to established financial markets. I think that's quite an interesting split. So perhaps if you had any comments, and then also just it would be quite interesting to have your view on what impact you see DLT and tokenization having on existing companies here in Luxembourg, financial service companies.
Well, Chris, this is an interesting question, and if you had asked me 6 months ago, I would say my answer would have been a complete different one. Indeed, in terms of new market players entering the market in the matter of tokenization, we were still early days. As I mentioned before, we did not see so many projects. And those that we saw, let's say, the majority was at a very immature stage. We were, as the CSSF, following thoroughly the developments of the market. We were aware of the different business models of the market, their risk opportunities, their potential disruptive power, but we did not see many practical cases. So it was difficult for us to bet on the outcome. Mm-hmm. And I would say this has changed since the announcement in September 2020 by the European Commission of the Digital Finance Package, with notably the proposal for a regulation for MiCA and for DLT pilot regime. I would say that was at that moment when our views took a turn. Of course, we had heard that there was something in preparation by the European Commission, but when discovering the whole package, the level of detail and the extent of the proposals, that was a very a much expected, but also a welcome surprise. Mm-hmm. So not only does MiCA now propose a harmonized framework for all crypto assets and EMTs, e-money tokens, that until now did not fall under any specific regulation, but MiCA does also regulate a certain number of services around these crypto assets. Those services until now were only partly falling under existing AML rules. So that was another new element of the MiCA proposal. And then here comes the news. These services may also be provided by incumbents, such as banks, investment firms. And now, this will have as a result that the financial sector as a whole will be transformed, because you will no longer have like the traditional financial services on one side and the fintechs and new players on the other side. No, you will have like a financial sector where a wide range of crypto services can also be provided by incumbents. Mm-hmm.
Okay, so the digital financial package of the EU really acting as a catalyst to create a new type of financial industry, both for the incumbents and then also for new entrants. Just to pivot back to the CSSF briefly, you've obviously taken on quite recently a new role as head of innovation at the CSSF. Maybe you could talk through what that means and how the CSSF approaches the topic of innovation and new projects.
Yes, I confirm that the CSSF has decided to create a new division within its IPIC department. This division is consecrated to financial innovation and new technologies. The mission of this division, which we call our Innovation Hub, is to accompany the transformation, the digital transformation of the financial sector. And in order to fulfill this mission, it is very, very important for us to really know what is going on in the financial sector. What are the new technologies? What are the concrete applications, the business models? What are the potential risks? How can they be covered? What are the opportunities? And also, as I mentioned earlier, what is their transformative and their disruptive power? And for these types of applications, we're interested not only how do our existing players apply them? What are their projects in order to become more digitalized? But we want to get to know those new players. We want to see who is behind those projects and how are these projects evolving.
Okay, so a nice and open approach to innovation at the CSSF. So just as a last question, because I realise we're running rapidly out of time, what would your advice be to a tokenization company looking to set up in Luxembourg in terms of how they should interact with you guys at the CSSF?
Well, the good news is there is no harmonized or standardized procedure to get in contact with us. Should you have a question, no problem, just give us a call. Would you like to discuss a topic? Give us a call. Should you have a concrete question? Well, I would say it would be better to drop us an email that allows us to do maybe some research and get you the right answer. Now to come back to your question, how should the fintechs interact? I would say that there are roughly 3 stages. The first stage is an unofficial stage. The second one is the official presentation of the project. And the third one is the licensing process. So first of all, you can simply come to us and have like a meet and greet, get to know the regulator, get to know the expectations of the regulator, and get some guidance as to what regulations may apply, and to see whether or not there could be a possibility for a license, although the conclusions at that stage are not binding. We, on the other hand, will feel the pulse of the sector and see what is going on. The second stage, the official presentation, well, there we see projects that are already more mature. When requesting to meet with the CSSF, we will request like a business model or detailed presentation in order to make sure that when you have a meeting or a call with us, we bring the right competencies from other departments to one table. And it is at that stage where really the regulation is discussed, potential blocking points or regulatory obstacles. It is often the case that we can pinpoint some concrete problems of the business model. And there we will request legal analysis in order to see what the prospect proposes in order to get around those obstacles. But I think it is of utmost importance here to highlight the fact that although the CSSF is there to give you guidance, we cannot play the role of a legal advisor. So that is something that where the prospect will need to get some advice by a legal expert sometimes. And then I would say that at the issue of that stage, we will see is there a necessity for a license or not. And then we can proceed to the third and the last stage, the official licensing process. Well, here the interaction is more formalized. You have to fill in forms, you have to provide documentation, and you will be in direct contact with our different departments if there are any transversal aspects of the file. And it should be noted here that the Innovation Hub will in that case take the role of an internal coordinator to facilitate the exchange with the CSSF.
Okay, well, thank you very much. I think that's an interesting overview of A, how the regulator's approaching the topic of tokenization, and then B, also how companies that are operating in the field should look to interact with you. I'm just aware that we're now running out of time, so all that remains for me to do is to say thank you very much for joining us today and taking the time. And I will now hand over to Emilie Allaert from the LHoFT, who will guide us through the next panel on practitioner and business use cases for tokenization. Thank you very much.
Hello, welcome to this wonderful panel with the pioneers of tokenization, as they like to be called. I'm quite happy to be joined by Luc Falempin, who is the CEO of Tokeny, avid traveler, and he is French, studied in Canada. And he is a poor guy from COVID whose fiancé is actually stuck in Bolivia. So we are really bearing with you on this tragic situation, I would say. And then we have Alexander Tkachenko from VNX. He is the CEO and founder, and also the founder of 2b.lu. What sold him Luxembourg, it's quite incredible, is the weather. So apparently you came at the right time, because I'm not sure that this year would be the thing that would solve Luxembourg to you. And then we have Guido Stroemer, who is actually currently in Switzerland, and he's the CEO and co-founder of HXLAx. And prior to co-founding HXLAx, Guido was also the global head of repo trading at UBS. And amazing performance from Guido. He ran 3 times a marathon, 2 times New York and 1 time Berlin. So welcome, and thank you for joining me on this panel. Well, that's quite incredible as well, is that you have 2 common points, the 3 of you. Next to being the pioneers of tokenization, especially in Luxembourg, you have also, all of you, a diploma from the US. So congrats. That's quite interesting to see how Europe is connecting to all over the world. So let's start with the panel. And before going and diving into the projects you are dealing with and the business case of tokenization, I would like to ask you if, in your opinion, companies are actually looking enough into the topic of tokenization. Are they really interested by it? Are they already looking into it? Or should they pay more attention to it? So maybe Luc, because you have quite a lot of business case going on, so I would like to see with you whether there is a lot of interest from the market or not.
Yes, indeed, we are doing tokenization for 3 years now with very different type of assets, and now we see that it's more institutional. Before we were tokenizing a decentralized network and different type of utility assets. Now it's more about finance. So it's more about funds, about securitization vehicles for very different asset class. So indeed, we see more interest now. Blockchain is not a bad word anymore. I think most people understand the main concept of blockchain, how it works. Even Bitcoin is not a swear word anymore, so I guess it's evolving.
Okay, and you, Alexander?
In my feeling, we're at the early stage of the understanding what the technology brings, what the advantages are. If 2-3 years ago it was indeed a bad word and most people were not really sure what it is, I think big players are now really starting to pay attention to it, but we're still at the very, very early exploration stage, I would say. Therefore, yes, the large companies are starting to pay attention, but it is still far from the mainstream or from their main focus.
Okay. And you're also targeting the financing of SMEs, especially. Do you see a lot of SMEs coming to you to actually learn more about tokenization or actually get the funding for their company like this?
Yes, we see quite a bit of interest in it, but at the same time, I think the awareness of how it works and what it can actually bring, as well as from the institutional investors who in our case need to lead the rounds, is still at the very early stages.
Okay.
But there's for sure interest.
Okay, we hope it will grow. Guido, on your side, what's the interest on tokenization you're seeing? You're currently working with Deutsche Börse and Clearstream. Is there any other partner or any other company that came to see you and to learn more about your solution?
Sure. So maybe just as a bit of background, there obviously are a large number of different tokenization initiatives and projects out there, ranging from the tokenization of financial assets to real estate to art to IP rights on music, etc. And also spanning, the landscape of highly regulated markets to markets that are less regulated. In terms of, my personal experience with HXLAx, we are involved in the highly regulated market of enabling securities ownership transfers for high-value transactions for highly regulated institutions. So we've partnered with Deutsche Börse and Clearstream to provide an operating model under the regulatory licensing of Deutsche Börse and Clearstream to leverage technology to enable market participants to transfer baskets of securities in a more efficient, transparent, and capital efficient manner. We recently connected, or in the process of connecting, several preeminent tri-party agents and custodians. So we currently have Clearstream, JP Morgan, and Euroclear connected as tri-party agents, and throughout the course of 2021, we will also be connecting Bank of New York Mellon, BNP Securities Services, and Citibank to enable our clients to seamlessly transfer ownership for baskets of securities sitting in those collateral pools. So to answer your question in a more precise manner, we are seeing a huge amount of interest from existing incumbent players to connect to our platform, and also for our mutual clients to use the platform to provide improved collateral mobility across the securities financing space.
It's quite interesting to see that there are things going on the background. What's interesting, and we would like to know from you all in the audience, behind your screens, whether you will have some initiatives or projects on the blockchain. So if you want, you can refresh your screen and you might see the poll, which is, do you plan to start project using blockchain technology, whether it will be next year, this year, or after 2025, or never. Quite interestingly, we can see that, well, a lot of people are actually thinking about never. That's afraid. I hope it will be a really low score on never, because then you have a big issue on staying up to stage and up to date with the latest development, I guess. 2022 to 2025, that's the winning poll at the moment. Quite interestingly, 2022, what do you believe is the right timing? Is it in the average for you with what you see, and you believe that the technology will be more mature by the time? Or do you think it's right now that you have to go for tokenization?
If you ask myself, you should have started as usual 3 years ago. Yeah, if you invested in Bitcoin when it was 0.00008 cents, probably you would have had more than 1 billion now. So investing by $20. But the sooner you start, the better it is. I recently spoke to some technology investors, and they feel that the space of actually, for them, as a small fund to invest into blockchain projects is about 2 years. They just feel, maybe 2 to 3. They just feel that as the technology starts to mature, as the major players move from the proof of concept to the scaling, or to actually development and deployment of the platform, the stakes will go much, much higher. Obviously, there will always be niches that you can explore, but the kind of open field that at the moment, or some years ago, blockchain would be shrinking, with every year. Therefore, if you are thinking to start something, you have a very good idea, don't look at COVID, try to do it now. There's never a better time to start a business than now.
And that comes to my next point. You said if you have a good idea. What you should look into if you want to start a tokenization project? Should you look for your pain point? What are the criteria before starting, really? What is the assessment you have to do before jumping into this tokenization thing? Maybe Luc?
Yes, so different things. First, you need to understand why you do it. So you have different value proposition for tokenization. The main one being the transfer of value on the internet. So we know the old internet with the transfer of information. Now we have the blockchain with transfer of value. So it changed a lot of things because now you can transfer securities in a few minutes in full compliance. So if you want to bring more transferability for your investors, it makes sense to tokenize. Also, if you want to target a broader audience of investors, or smaller investors maybe, and in higher numbers, it makes definitely sense to tokenize. So what we see with our clients is that they first need to define their securities or to have existing securities. And then as they pass through the door of the technology or machinery where we represent these assets on the blockchain pretty quickly, and then they digitize their operations like this.
Okay. And Guido, do you agree that you have to find a pain point before going through tokenization?
Absolutely. So I think it all starts with a pain point, and then designing a solution to deal with that pain point. And I would also underscore that the utmost importance for that solution to fit within existing legal constructs and within existing regulatory requirements, particularly for those use cases that are involved in regulated markets. So there needs to be complete legal certainty that, for example, in a securities lending transaction, that if the music stops, if there happens to be a default in the chain, that everyone involved in the transaction knows exactly who owns what at a given time and what the legal rights around that ownership are.
Okay, we'll go back a little bit later to the interoperability. Before that, I'm curious to know what's the most interesting business case you've worked with, and what, in your opinion, would be the perfect or the unicorn business case you would like to work on? So a round table for this one. So Alexander, maybe if you want to start on what for you is the ideal business case.
We are very much focused on the VC or syndication of the deals by the VCs. Actually, we completed the first VC originated deal in Europe on the blockchain. Interestingly enough, it's one of the best South Korean fintech startups, Stroemer, which is one of the largest crypto exchanges in Southeast Asia. With the current rise of the Bitcoin, it's probably a fantastic deal for the investors, a star performance, et cetera, et cetera. So it's probably a very good business case where the deal was originated by a professional VC. The syndication was done, and it's turns out, at least for now, a very good investment. In my particular view, we are at the stage where the industry needs this type of star performance. You invested $1 and you walked out with 100. These are the deals that the industry needs for more and more people to pay attention to it, to participate in it, to actually get interested, open wallets, to try it. So I think this type of the deals that we, for sure, would be looking for.
On your side, Luc, I think you're really heavily focused, at least from the beginning, in real estate, but there must be a number of business cases that you can actually apply to Tokeny.
Yes, real estate has a lot of traction indeed. But basically at Tokeny, we see blockchain as a shared IT infrastructure. So we think that for public markets, everything that is listed on big stock exchanges, you already have an infrastructure, stock exchange actually, and CSDs and so on. For private markets, you have no infrastructure. It's very paper-based, it's in silos, it's fragmented. So we think that all private markets can be addressed via tokenization. So half of it is private equity. It will come, but I think it's a bit early, maybe for pre-IPOs companies in a few years, but it's risky for them, so they need more maturity on the market. Closed-end funds, especially real estate closed-end funds, you have so many real estate assets all over the world. It's a good asset for investors. It brings confidence. It's illiquid by default, so it's understandable for investors. And then you have debts, but it's run by big banks, so they are starting to dig a bit more and to start some projects. And after you have commodities, where it can be important as well. So far it's mostly indeed real estate with a different type of financial instrument, being funds or securitization vehicles or companies, depends on the project.
And your dream business case would be?
I would love to tokenize trillions of real estate, and I think it's what we can do. We started, and last year we tokenized for $8 billion of assets already. So there is no limit, technically speaking. Now we need to find the right issuers and the right financial institutions to do it.
Good luck. Guido, what is your ideal business case? And
well, I'm probably speaking my own book here a little bit, but at the moment we are just laser focused on our initial use case to enable our clients to execute delivery versus delivery ownership exchanges for securities that are sitting in existing tri-party agent and custodian locations. And that's really where our focus is for the remainder of this year and beginning of next year. That being said, we do have longer term aspirations to expand our operating model from Europe into other jurisdictions such as Asia and also the US. And we would also in the future entertain potential interoperation with other platform providers that may be tokenizing or bringing other digital forms of assets to their platforms. And I think the ability in the future to interoperate across networks is a huge opportunity for the industry.
And we touched base a little bit on that, but we'll come to our second poll question for the audience. We're wondering, and you are actually wondering, what you, the audience, is believing about the advantages for investors. So the questions really is, do you believe there is an advantage for the blockchain technology, and what is the most important one for you as an individual investor? So would it be the greater access to potential investment? We spoke about the investments from Alexander with a portfolio of SMEs. Is it more about an access to real estate? Is it more about decentralization, innovation? Other, well, you can just send us an email afterwards or discuss in the chat. We will be happy to discuss that afterwards. Or no benefit at all. And that would be worrying. But I'm curious to know if there is, in your opinion, no advantage, because we're building the Luxembourg Blockchain Lab, and we are looking for people who are totally against the technology to actually participate to the blockchain. We can explain why they do not believe in this, and there are a lot of people currently who believe it's just a hype and there is nothing behind it, and we could do it another way. So we're curious about this as well. Well, 51% is thinking that one of the advantages would be a greater access. Do you agree with that? In general, that blockchain technology, the advantage for individual investor would be the greater access, or do you see something additional to that?
If I am to start, the blockchain came to prominence with the development of Bitcoin, which actually, the main purpose of which was actually decentralization. It came in the wake of 2008 crisis, and the premise was that the government's influencing or printing unlimited amounts of money is actually bad. And I do believe that probably decentralization is still a very, very powerful and probably, in my opinion, main driver of the innovation if we look globally. Looking at Luxembourg, an extremely well-run country, probably one of the best places to live, and for sure one of the best places to do business. You don't really have that urge. But are you to live in, for example, Venezuela? Your view would really be a bit different. That's coming back to the weather. What sold Luxembourg to me. Your point of reference is very important. But then, of course, having the decentralized, the trust of the system. By default, you would then have like a global possibility or reach and reliance on that system. Therefore, although I think decentralization comes first, it's very closed by the greater access, but they're kind of working together.
Okay, and Guido, your opinion on the poll results? Do you agree with the vision of the audience?
Sure, you're referring to the decentralization part of it or the greater access?
Access.
Yeah, well, look, I'm really, in terms of the specific operating model that HXLAx has built in conjunction with Deutsche Börse, it's really intended not for individuals or retail clients or individual investors. It really is meant for institutions. And in terms of their access to our operating model, they have that already, quite frankly. So I'm not entirely surprised by the results of the poll, personally.
Okay, and Luc, what's your thought on the results? Do you also agree that it provides greater access, and that's why we're working towards tokenization?
Yes, definitely greater access. It doesn't mean retail investors, but if we come back to the example of real estate funds, for example, it's very hard for investors to invest because when you invest, it's for 5, 7, 10 years. So you're basically stuck in this investment, and it closes the door to smaller investors. It's only for institutional investors or people who can wait for that long. So if you have more transferability, you will have a greater access by default. About the decentralization, I'm not too sure. It brings transparencies, yes, but we do centralized finance on a decentralized infrastructure. It's good to have a decentralized infrastructure. It's more resilient, and it brings an infrastructure that you pay only when you use it, if you use public blockchains. But finance is centralized, and you need to have an issuer who is responsible. He has some rights, duties. Investors are the same, and you need to manage permissions and who can do what in this infrastructure. So decentralization has its limit, I think. But when you have the full ecosystem, using the same shared IT infrastructure, you get some kind of decentralization. If we make the parallel with public markets where everything gets centralized in a CSD, it's more decentralized, but I think greater access is more important.
And I would like to know, because as we said, you're kind of the pioneers in tokenization, and you have started by going to see the traditional finance industry, I guess. And I'm wondering, how was your discussion? Whether they were afraid of the technology, whether they were interested. Should they be afraid of what tokenization will actually do to their business? And yeah, that's something I was wondering. How was the first introduction and meeting and interaction with the traditional industry? Maybe Luc.
3 years ago, we were starting every presentation by explaining that cryptocurrencies and security tokens are totally different things. Now we have way more interesting discussions. I will say the challenge is to find the best business case to start with, and for big financial institutions to understand where it will impact their actual business lines. It's about digital transformation at the end. And it's a disruptive technology, even with the right toolbox. You start here, and then it grows, and it takes a lot of space because it's powerful. So I would say that we have really interesting discussions. and way more advanced than 3 years ago, obviously. But we still need to educate a lot to explain how far we can go and that they can control their securities, even if it's a shared IT infrastructure.
Okay. And Guido, you're directly working with Deutsche Börse and Clearstream. So how is the relationship? How is it to work on this such, let's say, hype and trendy topic, technological as well, with the traditional industry? You mentioned interoperability. Is it a real issue that you have to address on a daily basis, or was it addressed right from the beginning?
It was addressed right from the beginning. You know, the word disruption comes up often, and I believe sometimes if there's a misunderstanding of what disruption can mean. In the example of HXLAx and our collaboration with incumbent players like our strategic partner Deutsche Börse, in my view, it's much less about disruption and much more about collaborating to complement expertise to drive efficiencies. So when we first began engaging with security settlement infrastructure providers in Europe, we made it very clear that we had no intentions or ever would have intentions to replace these incumbent players, but we wanted to showcase the cool technology that we're developing and propose a collaboration whereby this technology could be used by those incumbent players to provide efficiencies and value to their clients and also to our clients.
Okay, and let's finish the roundtable with Alexander.
I think in all technologies, when something new comes up, the first reaction is fear. So most of the, what we've heard is that institutional players by default are institutional. They have the machines running, etc., etc. Therefore, when there is an obstacle, the first, or when there is something new, that's not an obstacle, it's a fear. But then working together, explaining, seeing how the technology develops, that it is here to stay, actually creates the second stage, which is curiosity. When I think now moving to the third stage, which is to try to see how it can be applied to the business, whether it can be applied to the business in which circumstances, and then of course we will move probably in a few years to the early adoption. So this is the stage where we're at, in my opinion.
Yeah, you're referring to the Rogers curve, and we are actually seeing quite a lot of this, and we hope we will not be the laggards in Luxembourg. I'm just wondering, we mentioned the fear and so on. Do you believe there is something to do with the current framework around regulation? Is it something that is afraid people, or is there something that must be done in terms of regulation or clarification, whether it be from the European Union, whether from Luxembourg? What's your feeling about it? You've been, I think, dealing with this issue on a daily basis for more than 3 years now. So how do you see evolving the place on tokenization?
So on my side, we saw the regulation evolving a lot in the last 3 years, so that's a good part. I think from day one, everybody agreed that security tokens were securities, but it was not written anywhere. A few jurisdictions started to write it in their laws. France, recently Germany, now Luxembourg. So it brings some legal certainty for financial institutions, and it was mandatory for them to start working on this technology. A few months ago, you also had the MiCA new regulation. So it's not live yet, but at least it shows that even the European Commission is going to the same direction. So for security tokens, I think it's clear enough. Now we have full green lights to naturally issue securities on the blockchain. What is missing maybe is the situation for stable coins, because we need stable coins if we want to use the blockchain as a DVP system and for settlement and so on. So currently on the market you have stable coins in USD. okay, we can use that, but it's not exactly what we want. So hopefully very soon the legal framework will be better in Europe, so more banks can issue their own stablecoins or other new players.
And in your opinion, Alexander, how was it to actually manage issuing security tokens, and what's the perception around it?
There was a lot of legal work, I must say. It's a highly regulated area. Obviously, therefore, we really had to spend a lot of time working to try to find the solutions which would allow us to do it. It is indeed very welcoming that there is more clarity coming to the market. I think over the next couple of years, we will see the regulation being more and more firm, bringing more and more clarity, and together with the more interest from the players, that will actually start to develop into the practices. So yes, it was, as usual, extremely difficult at the very, very beginning. It gets a bit easier now, and hopefully it will be reasonably easy within 2-3 years.
Okay, so you would say that people who are interested in investing in security tokens or interested in the tokenization topic, they should really be reassured that there is no issue and it's regulated the best they can right now. So they should be really willing to do it, and they can do it safely.
There are different categories, of course, of the investors. There are investors who are prepared to take a punt or a risk. If you look at the, for example, latest pronouncement by Musk of Dogecoin or Dogecoin, which was indeed just a joke, yeah, a Bitcoin imitation created for a joke, but nevertheless it is traded. Yeah, there is nothing behind it, etc., etc. But still, people are investing, and there is this category of the investors. But the majority of the investors obviously would like to have some sort of protection or understand that there is a legal framework which is behind this. So I think the regulation should allow those who are prepared to take the risk, but also who are prepared to, in essence, either lose or take a maximum return, but obviously look after the majority that are in the main frame, I would say, of the regulation.
Okay. Now, Guido, on your side, I think you always worked on your project and the creation of HXLAx in relation with the regulation, and you mentioned it earlier. You always try to see the solution as integrated in the regulatory and tech framework. How did you manage that?
Yeah, so, by design, we created this operating model to fit within existing legal constructs and within existing regulatory frameworks. And as that regulatory framework evolves over time, we will certainly also consider evolving some of our services over time. But we wanted to ensure that on day one, we'd be able to provide value for our clients with our the operating model that we created in conjunction with Deutsche Börse to provide value on day one. And that's where we are. So we're quite happy with the regulatory framework as it stands now, but certainly we will also look into opportunities as that framework evolves over time.
Thank you. We are currently reviewing MiCA. You must have done so as well, I imagine. I'm wondering, what is the margin between the application of MiCA and the application in Luxembourg? Is there a leeway? Is there a margin that can be put? Because I've heard that Luxembourg wants to really enter into the game in terms of tokenization, become the place to be. Do you believe they should just go follow what MiCA is saying? Should they give a little bit more margin? What is your opinion, Alexander?
Well, in my particular view, I think what Luxembourg stands and is good at is dialogue, and therefore, the dialogue with industry players, the dialogue with large customers or service providers around it would actually provide the best guidance into whether the MiCA is sufficient, or in some ways we actually need to go further, or indeed not. Try to limit ourselves. I think the best one is to try to speak, with the practitioners, with the regulators, with the legal, audit, and investor communities to try to see what's the best way for Luxembourg.
Okay. Luc, how do you see the arrival of MiCAR? Is it going well with your activities? Do you see some adjustments to be done?
It will be a long process, I guess, for the next 2 years to work with everybody to be sure it goes in the right direction. But indeed, Luxembourg is very good to do this, to talk with the different players. So MiCAR is not for security tokens, it's for other type of tokens, but it's part of the whole thing. There are still some concerns. Personally, I think that we should not see the wallets as bank accounts. Because it's more like a browser for blockchain, it's not a bank account. So different functional dimension to take into account that are not there for the moment. It's only based on the type of assets that you tokenize. Still some work to do, but I think Luxembourg is in the right place to make it work. They're always the first ones to apply the European directives the right way to boost the economy. So I'm sure they will do it again.
Excellent. Guido, what's your point on the latest regulation?
Look, I think Alexander and Luke covered it very well, and they are the experts in that field, so nothing further to add from me on that one at this stage.
Okay, now a question of, let's say, to answer the audience and the questions they might have. How they should approach the tokenization process. So we said they have to go analyze the pain point, decide whether that would make sense for tokenization. Then what's the next step? Should they come to see you with their business case and discuss and see how you can proceed? Should they first do a legal assessment? Should they do it like on an international way, or should they just start local, maybe in Luxembourg? That's a real question, because in Luxembourg, what we're seeing is that there are a lot of multinationals and a lot of companies whose headquarters is actually outside of Luxembourg. So they might be interested in the tokenization process, but they might not know how to proceed. So what would be the process you would advise them? Alexander? For SMEs, especially.
For SMEs, yes, because this is exactly what I wanted to say. I think the process is very different for a different kind of customer. A SME would not normally go to a law firm simply because it's quite difficult. I would actually say in our particular case, our target audience are indeed medium enterprises as well as VC funds. So the probably even more VC funds or the investment, early stage investment and startup ecosystem. I think the key would be really to try to understand whether they are advantages, whether their offering would be interesting to the investors per se. Is there anything else except for the wish to raise money for the SMEs, or how would it be structured if it's a VC fund? What are the advantages for the co-investors in case of the syndicated deal, and how it would function? But in essence, yes, if you internally have done a little bit of a homework and are quite happy with the project and you see advantages for the investors, we're quite happy to speak for sure.
Okay, and Luc, on your side, how does it work? If I have a project of tokenization of real estate, should I just go see a lawyer? Should I directly come to you? How does it work?
So we focus on security tokens and financial instruments. So there are securities, so you need to do your legal documentation to issue the securities, depending on the type of investors you target, being retail investor, institutional, qualified investor in the US, accredited investor, and so on. So really depends the type of securities you issue. Then the technology part is actually just a quick step. Just security tokens are another format, a digital format of securities. But now we have the technology to issue security tokens in a matter of minutes with the right framework, with 6 different smart contracts to apply compliance, and so on and so forth. So it's not a technology issue, but you need to issue your securities the right way.
Okay, and if I already have a real estate fund, can I come to see you to actually tokenize it? Or is there more advantageous to just start from the beginning by doing tokenization right from day one?
So we can do different things. We can tokenize a new fund, for example. We can tokenize 100% of an existing fund or a new share class of an existing fund. So it's really à la carte. It's really as you want. Of course, if you start your fund with this value proposition of having digital shares, it's better because it's an enhanced value proposition for your new investors. When you will reach investors, it's an additional value proposition. You can explain them that they will have more transferability, that everything will be digital, so you have less management fees, for example, that kind of thing. So it's better if you start from day one, but we can tokenize any fund, existing or future.
Okay. And Guido, on your side, that's the last comment for the panel. If we are interested in HXLAx and what you're doing, how should we come to discuss with you? Should we come prepared? What should we look for?
Just give me a call and we'll take care of it from there. Now, look, our onboarding process is well defined. And it really involves a due diligence process around the legal construct, quite frankly. So as I mentioned before, it's crucial that the clients that we onboard to our platform, which are our target audience of banks, are the 30 large GSIP institutions out there. And they typically will then need to go through a rather in-depth due diligence process to ensure that they are comfortable with the underlying rule book and licensing agreements that need to be executed. But that process typically should take no longer than 3 months. In certain cases, it takes a little bit longer, but it's certainly a process that's well defined, and we will then also support our clients in helping accelerate that process where possible.
Excellent. Well, I guess the audience now has all the key, so just feel free to contact this wonderful panelist who will be able to help you with assessing whether tokenization makes sense or not for you. I think now it's time for Q&A, so it's your turn behind the screen to actually ask your questions to the panelists.
First of all, we'd like to thank you because we've gotten many questions that have come in so far. First question is perhaps a bit of a philosophical one to all of you, or Emilie, you can decide who answers this. By a Heinrich Hugenschmidt, who asks, where do you see the first mass market for tokenization to come? Central clearinghouses? And a Rick Serrano asks a similar question. When do you think that tokenization will touch the lives of people outside of finance?
That's an interesting question. Who wants to go first?
I can answer. I think there are two separate questions. One is regarding the financial infrastructure, and here I'm probably less qualified to answer. Regarding the blockchain as a technology already touching the lives of many people, I think cryptocurrencies was the first application, and indeed it's outside of the Europe, United States, where a lot of people have been investing into cryptocurrencies, not necessarily as a way to try to gain money. Obviously, it is extremely appreciated, but to save capital, to easier transfer capital, etc. Therefore, I think the first applications of the blockchain have already been kind of felt by a large group of population. It's now that we see the emergence of the second, where it is securities, possibilities to invest into the stocks, etc., which are coming, but the first wave of kind of push of the technology has already been done.
I fully agree with that. I think with the Luxembourg Blockchain Lab, we are seeing a lot of projects outside of finance which are really promising. We've also seen that blockchain has a lot of impact on financial inclusion, actually, and a lot of developing countries can benefit from the technology. So that's actually one of the goals that has been reached. Maybe Guido, you want to answer the first part of the question as well?
Regarding the CCPs, well, yeah, interestingly enough, we are actually in the process now of engaging with a number of CCPs to potentially get these institutions to accept our digital collateral records as proof of ownership for margin collateral to enable market participants to use our platform to satisfy pledge requirements with central clearing counterparties.
Excellent. Any other point you want to address, or is there?
Yes, I think, because we were talking a bit about mass adoption, I think cryptocurrencies were for different kind of people. For security tokens, it will come the day where your bank will propose you security tokens. It's just about credibility. So hopefully this day will come soon.
Yeah, if there are some bankers behind the screens, just think about accepting security tokens and offering them quite soon. Okay, another question maybe?
Absolutely, and speaking of bankers, a question came in. How do you think the role of the custodian will change as tokenization becomes more widespread? And Luxembourg being a prime custody center for financial services, how can tokenized securities work together with custodian banks?
Yeah, that's a good one. That's the question of the moment. What will custodian become? Whether they will just have to shift their operations, whether they'll have to adapt, or will we see the emergence of new actors? What do you see on a daily basis, and what do you hear in the industry about custodians? Maybe Alexander?
My personal feeling, we will see all three, i.e. some of the players completely shifting to the, some are trying to adapt, but maybe not necessarily fitting into the new world, and then emergence of the new custodians. So I think we will see all three in play. Which will be a dominant one is very difficult to say at this stage. We're really, really early on.
Luc?
We see different behaviors on the custodian topic, because actually custodian means different things. You have the service and you have the fact that you keep the asset. When it's about tokenized securities, the asset is actually on the blockchain, and nobody can really hack the blockchain, so this role is already fulfilled. But you still need custodians, you still need agents actually to service the securities, because issuers, they want to manage the underlying assets, they don't want to manage the administration. So you still need agents, so the roles are changing a bit. And also we see a lot of big financial institutions who want to buy custody solutions for digital assets, but they don't understand yet that cryptocurrencies and security tokens are totally different. If you lose your private key for your Bitcoin, nobody can help you. It's very famous. For security tokens, it's totally different. If you lose access to your wallet, you have recovery processes because someone controls the token via smart contracts. So as an investor, you can even do your self-custody if you want. And if you lose access to your wallet, you will prove back your identity to the issuer, and you will get back your tokens in another wallet. And as simple as that. So someone needs to manage this recovery process, this request, custodian, for example. But the risk to lose the assets is very minimum in comparison of traditional securities where you have papers somewhere in a vault and nobody knows where and nobody knows what is written on the paper.
That's good. That should reassure a lot of people. What about you, Guido? I think one of your partners should definitely be concerned by this. So what is their view, and do you believe there is already a solution that exists that can be applied?
Well, I don't want to speak on our partner's behalf, but in my personal opinion, the role of custodians and tri-party agents, while they will evolve over time, there will always, without doubt, be a role for those players to play in capital markets. And the roles that they play will, without doubt, be governed under regulation, CSDR, and other regulations. So, although the landscape may change with the introduction of new technology and issuance of securities directly on a ledger, the role of custodians and tri-party agents is a critical one, and will continue to be one that's fulfilled for many, many years to come, in my view.
Excellent. Do we have time for one more question, maybe? Yeah.
Sure. From a question from Malik. Who are the three biggest players of financial services that are implementing blockchain technology in their services?
Is it something like public information? I'm not sure.
It's a tough one.
It's a difficult one.
The issue we're facing is that a lot of people do have a blockchain initiative or blockchain project, but on the back, they are not really public about it because they just want to experiment. They just want to see what fits best their process. So I don't know if we have more clue about this, but I guess that's the answer to that.
We can mention a few things, but for example, in France, we're working with a consortium of banks to issue a settlement coin, which is a very interesting project because you have tokenized securities and a serious stable coin. So we'll make a DVP system on the blockchain. We also have a top 5 global custodian as a client. So some things are very interesting are happening, but indeed everybody is working under the hood, trying to make it work, to understand it, and to integrate this new technology in other products, in other services, because nobody cares about the technology. People want the benefit, so it needs to be packaged for a final service for the final clients, for the end clients.
Excellent. Well, one more, and then we are closing this Q&A session.
So this is a question from Sean Marsh, originally asked to Guido, but I think everyone should answer this. Where do you see the biggest impact of your tokenization solution?
So Guido, you're first.
Sure. So in terms of our operating model, the biggest impact is to enable banks using our platform to more efficiently transfer collateral across different collateral pools. So the underlying benefit for these clients is, operational efficiencies and cost savings.
Alexander?
Private markets. You have a possibility and quite liquid capital markets, and obviously what we're trying to bring is liquidity and efficiency to the private markets.
And Luc?
Yeah, private markets definitely. I think what will change everything in the next few years is direct ownership. Because currently you have a lot of intermediaries, and step by step, issuers will know exactly who are their investors. It will change a lot of things in terms of communication, transparency, transferability, and so on and so forth. So direct ownership will be a game changer from my perspective.
Excellent. Well, I thank you all for your time. Thank you for answering all the questions and exchanging on the business case of tokenization. And we'll leave the floor back to Chris and Nadia, who will discuss a little bit further about regulation for tokenization. So thank you very much and have a good day.
Thank you very much.
Thank you.
Okay, so thank you, Emilie, Luc, Guido, and Alexander for that really interesting panel. I think there was a lot of insights, and one of the things that seems quite clear from that is that we have some exciting times ahead of us. So we now move to the final section of today's event, and it's my pleasure to introduce Nadia Manzari, attorney and partner at Luxembourg law firm Schiltz & Schiltz. Before joining Schiltz & Schiltz in 2018, Nadia was head of the Innovation Payments Market Infrastructures Governance Department at the CSSF, where she started her career in 2001. So welcome today, Nadia. Before we get started with questions to you, again, I'd like to just ask a question to the audience. So again, if you don't see it, please refresh your page, and it should be below the stream now. So the poll question is, incoming EU regulation on tokenization is A, sufficient for the market to develop, B, a good start, but more is needed to help the market develop, or C, going in entirely the wrong direction for tokenization projects in Europe. And so while you're thinking about that, Nadia, I suggest we get started with our questions. So could you perhaps first give a brief introduction? We've talked about it sort of on and off today, but could you give a brief introduction to the digital finance package and how it interacts with tokenization in Europe?
Yes, of course. So first of all, I want to thank you for the kind introduction. And yeah, what does the digital package contain? I think we as Natasha already mentioned it in the introduction, the level of detail of this package was maybe somewhere a bit unexpected by the industry, by lawyers and regulators. But I must say I was really happy as I was reading this package, because it was not only addressing aspects like MiCA, or it's not only a proposal for the regime, a pilot regime for market infrastructure to work on the DLT, but it's really addressing many questions we had over the last years, be it the regulators, be it the lawyers, be it the industry, with regards to how to deal with crypto assets, how to regulate crypto assets, how to apply the digital ledger technologies to the financial industry. So it was really pleasant to read this document the first time, and to see also how many questions the Commission and the EU legislator tried to answer by this package. So we mentioned it already here. A very important communication in that package was, of course, the proposal to amend the MiFID directive in order to confirm within the EU and to confirm to everybody that securitized tokenized securities, of course, still fall under the MiFID law. The MiFID directive is, so that there is an amendment, as I already said, to this article, that it confirms that tokenized securities will still qualify as financial instruments according to the existing financial regulation. So I think this is already a very important message for the industry in order to avoid these market fragmentations which we were seeing to come up, because some member states confirmed it, other member states did not really take that way. So this is a very important, I think, for me, a signal that we can go this way, that it's not because they are tokenized that they have a different regime. We already talked a lot about MiCA, so this is, of course, a very important proposal included in that package, clarifying all the questions we had over the last years around the legal treatment of crypto, of stable coins, of, I would say, payment tokens, which are not clearly falling under the scope of any existing legal framework. Also about the crypto service providers, which were coming up over the last years, the market makers, the exchange platforms, the custody services. So here, MiCA really provides a lot of clarity, provides some legal, different legal frameworks for the different services, and I think that's one, of course, the famous document or proposal in that package. Another questions, and I think these questions we already had when I was working with in my former career in an ESMA working group. We were working on thinking about how to apply DLT to market infrastructures. Mm-hmm. And at that time already we concluded that market infrastructure, the existing legal framework applying to market infrastructure may not be adapted for the new technologies, because the technology is already far ahead of what this regulation is trying to address and to regulate. I just take the example of the book entry requirement, or the example of registering or securities with a CSD. So here again, I think the proposal which is included in that package of a pilot regime which will allow market infrastructure, CSDs, multilateral trading facilities to get some experience with the new technologies, to implement it somewhere for part of their services, and to try how they could just provide their services on those infrastructure. This is for me a very important element also of this package. And this pilot regime will allow them to exempt from specific points of the existing regulation. So that's really an interesting proposal, because it's quite rare that we have a proposal which is, or that the EU is trying to put in place a regime which is going to amend or just allowing to exempt from an existing comprehensive and legal framework. So I think that those are three very important elements in that package. But there is another one, maybe not so famous one, is the communication of the European Commission on the payment services, or more specifically the Commission's view or its retail payment strategy. And I think this paper is really important for the payment services provider and the payments industry as a whole, but also for the whole financial sector, because in this paper you really have the vision of the European Commission for the next, I would say, 4 or 5 years, where they want to go, what they want to reach with regard to instant payments, to interoperable payment systems, that it really wants a competitive retail payments market within the EU, and therefore it is really strongly supporting this interoperability of the payment services, the payment processes, the payment systems. In this document, there is also an indication that it is already thinking about the reviewing PSD2. So we just finished implementing PSD2. I think the last requirements of PSD2 have been entered into force now at the end of the year with a strong customer authentication for e-commerce. Now we are already talking about reviewing it. And here, an important information in this PSD review intention is that the Commission indicates that it intends to move from the open banking model to the open finance model, meaning that finance will even be broadened, more open. So I think that's also a very important communication to the industry to be prepared what's going to happen in the next years. And for payment institutions and EMI, also a quite important indication here is that the Commission is thinking to provide them direct access to the central banks in order also here to avoid market fragmentation. So they want to open up the settlement finality directive in order for those players to not be so reliant on banks anymore, but to be able to access central banks and the target instant payment system, for example, by themselves. So, but that's not everything. So finally, with this big, as I said, detailed content in this package, you cannot embrace financial innovation, you cannot promote instant payments and faster and better and more accessible financial services without also addressing the challenges which you then will have for your industry, for the financial industry, with regard to the risks firms will be exposed to, because they have to work with they have to implement all these technical challenges within their institution. And therefore, in this package, the Commission has also included the DORA, very nice name. It means the Digital Operational Resilience Act. And the aim of this proposal is to mitigate the ICT-related risk which the financial sector will be exposed to, in order for the financial sector in the EU to be more resilient, to be stronger with regard to that risks. And there the intention is to do it by streamlining already and upgrading already existing legislation, of course, and by putting in place new laws and requirements. And DORA will apply to more or less the whole financial sector, including the insurance industry also, and audit firms. So as the proposal is set now, it has really very broad scope. So I think that was
very good. So no, very interesting to see the
overview.
You know, it's not one measure; it's a collection of lots of different measures, both in terms of updates to existing financial services regulation, but then also new measures that adopt, that are focused on specific technological issues that we currently face. So it's quite interesting to see that interaction. Maybe now, if we could get the response to the poll up. Okay, so I think that how would you take that response? We have 74% saying it's a good start, but more is needed, and fortunately only quite a low percent in third place, 9% saying it's going in completely the wrong direction. What would you have as your response there, and what do you think is potentially still missing at the European level to help develop the market here?
I agree with the majority answer. I think it's a good start. As I already said, and giving you the overview, you see that the EU legislator really tried to address the main questions we had over the last years. and even more because DORA has also been included in this proposal. But of course, we, as the poll says, more will be needed for the market to develop, but we at least have to give it a starting point, starting regulation. And as, for example, the pilot regime, it's a very good example. We do not know really how those new services will look like with the CSD, with the multilateral trading facilities. So at least we have now a regime in place allowing them to test their product, to develop new products, and then we will see later on, and that's what the Commission also said says in its packages, to see how we will move forward later on with these new technologies, what will be the best way to regulate them. Because I think there's no solution now to regulate the whole technology in one package or the whole new upcoming services. So, because this will be maybe hinder more the innovation than giving it the possibility to develop.
Okay, and like in terms of potentially, I mean, obviously you're very wide versed in not only in a Luxembourg context but internationally. So what do you see some changes going on internationally in terms of trends around tokenization legislation? Would you say that the EU is broadly in line there with what's going on, or are there differences?
If I had a look at a few international regulations. I think Liechtenstein has a proposal, has a law. Switzerland also, and even Germany also had specific pieces or proposals of laws. When you look at them, some of them maybe they have a broader scope. They also maybe touch already other legal law aspects. I would say civil law aspects, which the MiCA is not doing. But when in essence, when you look at the text, they have the same objective, the same aim is providing a framework, providing some legal clarity, some legal certainty to those new services, to the new actors, but also to the existing financial instruments by using these new services. So, in essence, I would say they all have the same aim, the same objective. Of course, it is easier for one single country to have a broader framework, a more exhaustive framework for the country itself than in the EU. Having a framework for so many countries with different legal systems, different legal frameworks in place. So I think for first proposal, it's a very good proposal because it leaves some space for it. There's some flexibility in it, which we can further on build on and have better and have more maybe clarity later on. Mm-hmm.
Mm-hmm. So a good balance between, obviously, on the one side, having something that is, applicable across a wide variety of different member states, but at the same time something that hits the lowest common denominator essentially for lots of different sectors. Good. So, and then just turning again to the local scene. So obviously, Luxembourg has had a couple of measures in place. Firstly, in 2009, and then in 2019, and then in 2020. Sorry. Supporting the use of
payment services there.
2009 might have been a little bit early for DLT measures. So 2019 and 2020, and then obviously in January this year, on the 21st, Luxembourg approved what's known as the Blockchain Law 2. Yeah. Maybe you could just talk through those and what the impact is there in a local context.
So Blockchain Law 2 is the continuation, as you already mentioned it, of the Blockchain Law 1, which has been published and voted in 2019, in March 2019. And this law was really recognized the possibility to use distributed ledger technologies for the circularization of securities. The objective of this law was, of course, to provide some certainty to investors with regard to legal securities issued, which are circulating on the blockchain, and to make this transfer of securities more efficient by reducing some intermediaries. We already addressed this question too before. And the Blockchain Law 2 is just the continuity of Blockchain Law 1 with the objective to modernize the law of April 2013 on the dematerialized securities. And here, this law will allow the issuance of dematerialized securities on the DLT. So I think it's just complementing, both laws are complementing each other's. And when you look at the message and what the objective of the law, it's of course already paving the way for everything which is coming now in the next 2-3 years with the Commission proposal. So all this, what is contained in the proposal is already feasible in Luxembourg. So I would say we were a bit of a...
Getting a head start, so to speak,
yes,
in terms of the EU direction of travel in legislation. Okay, and just to switch over to my last question to you, I'm aware of time, obviously. This is one that we'd received externally, actually, in advance of the event. So thank you for asking it. So to what extent do you think tokenization is used as a data power play by sort of major payment players such as Apple, MasterCard, Google and Visa, who are thereby using this as a way of getting essentially customer data and leveraging that for their own sort of closed ecosystem? And then with that in mind, do you think that there's a need in Europe for a tokenization service, a European tokenization service that we ourselves use? So in other words, what's the role of big tech, and then how does that, do we need a European player in that space?
Yeah, giving you an answer on, of course, we absolutely need European players, maybe not just one, but more European players in that space. And when you look at what is happening around now at the moment, we just mentioned the European Payment Initiative, which has been launched recently, which should be the answer to MasterCard and Visa by putting in place a European payment system, I would say, payment system is the right term, by issuing European payment cards, by having really a pan-European interoperable payment system. So there's already one good initiative in that direction. Last year, the GaiaX project has also been launched. So I would also say this. I hope this is going to be moved forward, which the objective of this project is to federate a data infrastructure in Europe and a cloud model in Europe. So just now we need to cross the finger that those projects will move on, because I'm really convinced that with these developments we need some European players in that space, in that area, and I'm positive it's going to happen.
Yeah, me too. So that actually brings to a close today's event. So thank you very much to our sponsors, EHP, Clifford Chance and HXLAx for participating in this event. Thank you all to all of our speakers today for their expertise, and thank you to your audience for your active participation. So our next Focus On event is coming up in 2 weeks' time on the 23rd of February. We'll be taking a deep dive into the EU's relationship with the UK post-Brexit. I hope to catch many of you then. Thank you very much.